Good day traders, Richard Jacobs here and welcome to this week's edition of the Underdog Weekly Perspectives Report, where we reflect on the week that's passed and also form some views or perspectives on what we think the week is going to be doing in the days and potentially weeks ahead. You'll recall from last week's video that we found ourselves right down here, and we noted that the market had moved into a potential support zone coming in around about these levels, and we said it was really two ways we saw the market moving from here. We could see the market just continuing to push to the downside and breaking through the bottom of the support zone, or we could see a pushback back up into this previous support structure break over here, which could potentially form resistance. Now, early on in the week, the market actually rallied. It came out of the gates fairly strong and moved all the way back up into that support zone. And from there, really, it's been bumbling along sideways, pretty range bound. It couldn't break back up through this now resistance level over here. We saw some bearish days, bullish days, bearish, and it ended the week on a bullish note as it pushed up. At the same time, what's been happening is the stochastic has been working off a lot of its previous oversold condition over here, and it's pushed all the way back up. It's nearly in the overbought position over there, and it's really a question now as we look forward as to where do we see this market moving up to, and where could we potentially look for opportunities to get short, because we did make the point and we maintain the view that this represents a bearish break of structure to the downside, and from here what we're going to be looking for is really opportunities to get short and for this market to push to the downside again. Now, given Friday's trading action, it ended on a bullish note, but as I said, it really chopped around in last week. It's now becomes a question of, do we see this market just continuing to bubble sideways below this resistance level, coming in around about 45,400, 45,500, or do we see a deeper retracement playing out? Given where the stochastic is, we could certainly see further upside over here. The bullish candle on the day does suggest that maybe there's a bit more upside in this market. And if we were to see a break of the structure to the upside over here, or not a break of the structure really, a continued retracement, we could eyeball a few levels to the upside, one being this 38.2 retracement area. That's the retracement of this leg down over here. But there's not much in terms of price structure over there. We've got a little bit of price structure coming in around about there, which lines up nicely with that 38.2 level over there. We could also see a deeper retracement coming back into that 61.8, and that would line up with this bit of price structure over there. Conversely, we could see this 45, 400, 500 zone being this previous price structure support, now resistance, actually just holding, and the market bumbling below this level before continuing to the downside. So really, that's the kind of thing we're going to be watching in the week, very early on in this new trading week. Because what we want to see is we want to see the stochastic continue to push to the upside now. We want it to move into this overbought zone over here, and then we want to identify some kind of a candlestick formation to try and get short and ride structure to the downside. So that's certainly going to be something that's on our radar in the coming days. If we look at the ATR, which is our measure of volatility, you can see that things have been ticking up very nicely over here. We actually, if you want to add some support and resistance to these levels, we're starting to break these this level over here. We pushed up past about 11.1, and it would be really good from a trend trading perspective, especially for us to start seeing this volatility continue to tick up into July, because that would really open things up, especially as we move through the winter months. So that's what it's looking like from a price structure perspective. Let's switch over to some of the other markets on our radar to see how those could potentially influence the index and the movement in the index. Let's start off with the US dollar rand exchange rate, and as always we have the weekly on the left hand side and the daily on the right hand side. These are 3-line break charts. Nothing much to report in terms of a change on the weekly. Really the market's caught in this zone between let's just put it in between about 1240 and call it 1450. A move, it would take a significant weakening of the currency through the 1450 level to see a break of structure to the upside and continued weakness on that time frame. On the daily, things are a bit more choppy, but we do have some structure in place here. The market retraced over here, continued to upside, and broke structure to the downside in a strengthening trend. It then started weakening again in a form of a retracement, and now it's continuing to the downside. So on balance, what it looks like is that there is a weakening, a strengthening trend in the currency, which should really play into the hands of the bears on the top 40 index, in that it's unlikely on the medium-term time frame, being the daily time frame, that we're going to see a massive push to the upside playing out over here. If we switch over to the US markets, pretty bullish as it's been for all of this year, really. We're continuing to push to the upside, putting in higher highs and higher lows. Nothing really, we had a bit of a retracement early in last week and a bit of choppiness, but really it's quite a bullish picture still being painted by the US markets, and that's really what's been part of what's been preventing the market from really pushing down hard to the downside. So a bit of contradictory measures here if you compare what's happening on the US markets to what's happening with the exchange rate, and that's contributed to the choppiness, especially that we saw in last week's trading activity. On the oil market, it's not looking pretty. Oil's broken structure to the downside and is continuing to push to the downside over here, so fairly bearish. We have the weekly still holding structure. The market is holding above this $45 level here, but if we were to see a weekly close below this $45 level, that would be very bearish for the oil market, and we could see a significant push down in oil prices coming through there. And lastly, let's look at gold. Again, on the weekly charts, we had the break of structure to the upside, retracement, continuation, move to the upside. So gold still looking bullish on the weekly time frame. On the daily time frame, it's quite interesting. We had that move to the upside. Is a structure break to the upside over here, but we've been in a retracement over the past week, and it's really a question of where to from here for gold. We could see a push back to the upside, and in which case we'd want the market to push through these previous structure highs over here and really start tackling that $1,300 level. But at the moment it is in a medium-term retracement. So quite a few mixed signals if you look at it in that context, which really plays into what's been happening over the market over the past few days. And it really leaves the door open for this market moving in any number of directions. Shorter term, one would still expect some consolidation to be playing out, as we've mentioned when we looked at the price structure. That 61.8 retracement is an optimistic retracement level for the bulls at this point. More likely is that we see the market either holding or consolidating below this previous price structure level, coming in right here at 44,400, or at best, I think for the bulls at this stage, actually moving up towards that 38.2 retracement level, coming in around about 45,800, 900. So that's what we're seeing in the days ahead. And at some point, and potentially towards the end of this week or the latter part of this week, we're gonna really start looking for that continuation move to the downside, and we're gonna look for some kind of a structure or candlestick formation for us to try and get involved in a short and see if this market can continue its push to the downside. And then just an update in terms of the one of the stock positions that we highlighted in the weekly report. That's the long position on Aspen. Let's pull up that chart and have a look at how things are playing out on that front. So here's the daily chart of Aspen, and as you recall, that that blue little arrow over there, that's the candle that we identified as our setup candle, and we got involved in the to the long side around about the 12th of June. The market didn't really shoot out of the blocks after triggering our trade setup. Instead, it sort of bumbled along sideways, actually put in a lower low over here. But over the past few days, what we've seen is we've seen the stock start to rally and start to push up and put in some really bullish looking candles over here. So it looks like the continuation move to the upside is finally starting to play out. The stochastic has gone overbought over here. So the way we would monitor this is we're going to start potentially rolling our stops to the upside. If this, as this thing puts in higher highs, we're gonna try and roll our stops to the upside as far and as fast as possible. We still like the structure, we still like the move to the upside, but the fact that the stochastic is overbought, and given that the overall market is not really bullish, it's rather more in a consolidation formation, we don't want to be in a position where this thing just breaks to the downside again. So we're going to be fairly conservative in terms of rolling our stops up as fast as possible to try and get de-risk this trade despite the bullish looking structure. Okay, and then just something for you to eyeball as a potential trading opportunity. It's a bit of a fast and sharp one to be taking, and it's probably not the greatest looking structure, but what I have up on the screen is a daily chart of Barclays. That's share code BGA, and what you can see is it's really been chopping along fairly sideways. It's put in a higher high on this last leg to the upside and put in a retracement. Stochastic has rolled to this oversold level over here, and on Friday we saw quite a bullish looking candle printing with a higher high, higher close coming in here. The red lines that I've overlaid here are Bollinger Bands, and as you can see, the stock's really been, as I said, it's been fairly range bound, bouncing off the tops and the bottoms of these Bollinger Bands. And this last move over here with the stochastic going oversold and a bullish looking candle could actually be regarded as an opportunity to get long over here. So what we'd be looking for is, firstly, we'd be looking for our trigger, and as you recall, our trigger is always a higher high versus the setup candle. So we'd be looking for a move through the 145.50 level. So if the stock were to touch 145.51 intraday, we would regard that as a trigger of our potential trade, but we'd wait for a pullback back to this 143.77 level over here, and our stops would come in below the swing low, coming in at 140.20, and we'd be aiming for the top, this previous swing high over here, which really lines up with this upper Bollinger Band over here coming in at 151.80, and that would generate about a 2.25 to 1 reward to risk. This is one of those stocks where it may just push to the upside, and if it does, we're not going to chase the stock, but it's certainly something worth eyeballing if you want to get a bit of long side exposure. And as I said, it would be a quick trade. We're not looking for a massive move to the upside over here. We're really just looking for this quick push to the top of the trading range. So BJA is certainly one that we'll keep on our radar in the next few days, or in the next couple of days, to see if we can get involved to the long side there. So guys, that's pretty much it from our side for this week's report. It's not going to be, I don't think it's going to be a necessarily an easy trading week, given the playoffs that we have going in terms of the Rand-dollar exchange rate and what's happening on the US markets. We've got some opposing signals happening over there, and it's also pretty choppy with all the political news coming out that's impacting us via the exchange rate primarily. So it may be a bit of a difficult week. So as always, be careful. Apply good risk management, apply good money management in your trading. Don't get attached to any one position, and certainly don't get attached to don't try and shoot for huge moves or huge gains on trades. We are in a bearish market, and it's really a matter of timing from our perspective as to where and when this market starts its continuation move to the downside, and that is certainly something that's going to be our primary focus going forward. So that's it, guys. All the best for the trading week ahead, and I shall talk to you next week.